when we talk about journal entries, we do them and we know how to do them, but what we want to start to understand is what happens if we do not do the journal entry, okay? Understanding what happens when you don't do something helps you to actually do it better and appreciate it. So we talk about accruals a lot, but not just accruals. We talk about things that we should do in here, but we shouldn't. Let's talk about what happens if you don't do certain journal entries. So we'll look at just an exercise here, and what I'm going to do is I'm going to tell you about something, then I'm going to try to show you what it should be, and if it's not there, then we're going to say, oh, this is what would happen. Here's an example. If you fail to record some revenue that you recognize but not yet received, what does that mean? You fail to record revenue that you recognize but not yet received. Let's just say you did some work, and obviously when we record revenues, we want to record the revenues with the credit, right? So the credit revenues to show an increase in revenues. Credit revenues show an increase in revenues. And if we record it but we did not receive it, let's think of it like this. If I paid you right now, I would have paid you cash and you recorded revenues. That's if I pay now. If I pay now. Okay? If I pay you. If I pay later, then you should record revenues as we always do, right? And you should record accounts receivable. We're real there, right? That's what you should do. But let's say you forget. Say I forget. If I forget, think of it like this. Revenues increase assets. They increase assets and they increase equity, right? So if I forget to record an asset, I have less assets than I should, right? That means that, say I forget, then my assets will be understated. Why? I don't have enough, right? If I make it go up by recording it, but I forget to do it, then that means I'm going to have less, and that means it'll be understated. My assets will be understated. Now, if I forget to record this whole thing, that means I forgot to record my revenues, right? Revenues come under my equity, so that means my equity will be understated as well. Okay? So what I'm doing is I'm thinking about this is what the journal entry should have been, but I forgot. And so because I forgot, that's why I'm off a little bit. And I'm off based on this right here, okay? Does that make sense on that part? All right, let's try another one. Failure to record expired prepaid rent. Now, when we think about prepaid rent, we think about paying in advance, right? So it is our company that is paying. Failure to record expired prepaid, yeah, it's our company. So what happens is that earlier, at the beginning of the year, and it's, let me see, it's the 12th of the month, so we should have been done taking care of everything by now. But we didn't. So at the beginning of the year, it doesn't have to always work like this, but sometime earlier, let's say at the beginning of the year, I paid rent for the semester. Okay? That's 4 months. 4 months a semester, right? So I paid it up, how much is rent? $500 maybe a month? Well, yeah, they didn't have, but it's $500 a month. That would be $500. Let's put that, yeah, $500 per month. So for 4 months, I would pay $2,000, right? So on January 1st, I paid out cash of $2,000, right? And I now have prepaid. Remember, our current assets, Chris with a D, cash, one of them, debt investments, receivables, inventory, supplies, prepaid rent, I paid it up in advance. Prepaid rent, okay, up for the same amount of $2,000. That's on January 1st. At the end of January, I've already, as we would probably say, used up some of this. When you agree, we use up some of it, because at the end of January, if I look at my book, let's say February the 1st, if I look at my book and see $2,000, I'm going to be thinking in my mind, oh, I have 4 months of rent paid, enough to pay. I'm going to be good, right? But I should only have 3 months. 1 month. 1 month equals $500. So if I see this right here, this tells me that's 4 months of rent left, right? So on February the 1st, or better yet, it's the same thing, but on January 31st, to show that I have used up, because I used their expense, I used their place to stay in, to show that I've used it up, then I need to reduce my prepaid, at the very least, reduce my prepaid expenses. My prepaid rent, excuse me. That's an asset, by $500. And now, anytime we use up an asset, remember the definition for expenses to use up an asset. If I use up an asset, then I usually, well, obviously I'm going to record an expense there, but I usually call it by the appropriate name. In this case, it would be rent expense, okay, for $500. Now, this is saying that I failed to record prepaid, I failed to record expired rent, expired prepaid rent. Basically, I forgot to do this. So say I forgot again, right? You gotta stop forgetting. Say I forgot. Then, if I forget, then I would have forgot to pay an expense, right? That means my expenses would be over or understated. Think about it. I have light expense, car expense, bill expense, book expense, rent expense, but I forgot. My expense should be up here, but I forgot, so am I over or understated? I'm understated. I forgot to pay. Then my expenses will be understated. If I could get through this whole journal entry, then I've also forgot to reduce my asset. So think about it. This represents 5 months, right? If I forget to take 1 month off, it should be, well, say I forgot. If I forget, it should be left $1,500, but I still have $2,000. So if I forget, I should be showing $1,500, which is 3 months, but instead of showing this, and I'm going to be what? Overstated, because I have too much in there. Now, here's the problem. If you do that, then when it's time for you to go into pay your, or you may think you have free one, no, instead of saying 4, you really, excuse me, you may think you still have 4 months of rent paid up, but you only have 3. And so we have to make sure that we make that, because otherwise I'm going to make a bad decision about what I'm supposed to be doing. So this, you know, it's talking about just one particular thing, but the accounts right here individually are overstated or understated. This question here is asking in general, but the other one from number 1 is actually talking about everything together, okay? Everything good now? All right, let's do another one here. But you see what I'm thinking about, like, okay, I do it, and then if I don't get it, then okay, I'll just, see, if I forget to do it, that's how I'm going to really know what I did wrong, okay, or the effect that it will have on there. All right, let's take another one here. Fail to record accrued interest. I tell you what, let's do one a little bit more normal that we normally do first. Let's do depreciation, because that's one that we're going to see really soon. And we've talked about depreciation. So I failed to record depreciation. That means I forgot to depreciate. What does depreciate mean? To allocate some over a period of time. You buy something for, you pay $5,000 up front, and then you over time, you expense a part of that. So if I forget, what should be the journal entry is that I should, for depreciation, I should record depreciation expense every month. And I should record accumulated depreciation. It doesn't really matter what the amount is. Let's just say $1,000, right? Or every period I should do that. Now, one thing I want to point out, the only reason we're talking about any of these is because we're thinking about accruals, right? So always remember that accruals should always have let's always have at least one balance sheet account and one income statement account. You may have more, but that's one way to check our accrual. So when you ask to make an accrual entry or whatever, so in this case, let's see. Depreciation expense, that's an income statement account. And this here will be a balance sheet account because it's a country account, which we'll talk about it later on. But this is you see somebody maybe equipment, depreciation equipment, accumulated depreciation buildings or something like that. Okay. So this is an increase in expenses. Okay. This has an effect of increasing expenses. If I forget to increase my expenses, remember how we just added up our expenses earlier? I forgot one. If I forgot one, then my expenses are over or understated. Now I have my utilities expense, I have my car expense, I have my house or apartment expense, and I have depreciation expense, but I forgot. So instead of having this total, I only have this total. I'm understated. So that's the only reason I got that is because I had to say, okay, let me think about what the journal entry is. And if I forget, then that's what goes on. Accumulated depreciation, that causes my equipment itself to be on the books understated because the net amount, and that's something that we'll do, later on, but the net amount of that is going to cause my equipment to be understated because you would normally have something, your journal entry, your balance sheet would make it look like, let's just say the left-hand side, you have equipment, and then you see something like less accumulated depreciation, and then you have maybe something called net equipment here. That's the net equipment. So if I forget to do it, then my equipment, if I forget to reduce it by that amount, my equipment will be overstated at that point in time. The account will be understated, but the equipment will be overstated. Okay. And so what I'm doing is I'm trying to think, okay, if I don't do this, then this is the problem. So with anything we're doing, like if you forget to do a certain analysis, it's sports management or whatever. If you forget that analysis, will your person be over-prepared or under-prepared? Under-prepared, right? So it's the same thing, like, well, what happens if I don't do this right here? And so that's why I try not to even think of it as accounting. I try to think about, well, this is what's going on, and because this is going on, if I forget to do this, these are the consequences. And it has, like I said, the problem with being unprepared is they'll make mistakes, or they're more likely to make mistakes. Problem with looking at something that, if my depreciation expense is understated, the problem is I'm gonna pay more taxes. The expenses lower your revenues, right? So the more revenues I have, that's something we don't really think about. It's like, oops, right now. But then we have to pay for it. It's a little bit different. Accrued wages is another big one, okay? Accrued wages. What accrued wages? It is let's say at February, let's say at the end of the month, let's just say I work 160 hours. Okay? I work 160 hours. So since last month was February, then there should be something there to show that I worked 160 hours, right? I worked, so I expect to get paid, and so the company will have to have, you're the company now, you're gonna have to record my salary. I want to record my salary in this month because you need to know how many hours everybody worked, everybody in 160, right here. Think about Valentine's Day, right? So let's just say that for Valentine's Day, you threw an extra day in there, and no, let's make it extra 2 days, 176 hours. 176 hours, okay? So you know that every February you're gonna work 2 extra days just to get that done. So you work that now. For the 176 hours, there was an expense that you had to pay, right? And you had to pay, let's make this on February 28th. Let's say you had to pay that salary, wages, expense for 176 hours, right? That's what you had to pay. If you paid me on this day, if company paid cash, then that's fine, right? No problem. But the company will pay in March. That's no problem. I know I'm gonna get it. I trust you, right? So because you're gonna pay in March, think about this now. There were still salaries that had to be paid for March. So we need to do this, and this is for February. Okay, this is for February. There was still a salary expense, but instead of paying cash, then you would have paid me later, which means you would have had a liability, right? So the liability would have been for 176 hours. That's so you can know every February, every time you go through the books, 176, 100, if it's a leap year, it might be 188. But other than that, 2 extra days, then I'm working, right? If you forget to do this for February, when you look at your February books, either way, whether it was cash or this, but we're working with this because it's accruals, by the way, this is income statement, this is a balance sheet account. If I forget to do it, my expenses will be understated. My liabilities would have been understated. So if you forgot to put that in there, when March came, you be like, oh, I'm good. Man, I got 176 extra hours worth of money I can go spend on summer clothes. Hey, you mind paying me? You see what I'm saying? So it's the decision that we make behind it. And so the fact that would be that the expenses, if I forget to do it, then it is going to make my expenses lower. Okay, excuse me. If I forget to record my expenses, then my expenses will be understated. Okay? If I forget to record my liabilities will be understated. Okay? Now, this question here is probably a little bit different for each of these tell whether total assets will be under or overstated. In this case, there are no assets here, right? So it has no effect on assets. Okay? No effect. This is an accrual that should have been made. It has no effect on assets. Let's say they forgot to do this entry. What effect would it have on assets? I should have written down that I paid this out, but I forgot. I used to have, let's just say I had 206 in there. That's my balance. This is just, that's my balance, right? But you should have paid 176, right? Which means that you should have had less cash. So if you forget to do this, if this was the case, then it would have been, cash would be overstated, assets would be overstated. So this is 2 separate examples. The example that is here, since we're talking about accruals, is this right here. But think about if it was cash and somebody forgot, this would be relative to cash, okay? So 2 different examples, and a lot of times just make sure we pick the right one, okay? If you don't, more likely it would be okay. The last one to look at, let's see, the failure to record or recognize portion of unearned revenues. Failure to record or recognize portion of unearned revenues. What are unearned revenues? A liability, right? Okay, all right. All right. Unearned revenues. Just review. Unearned revenue is a liability. Okay, so we increase liabilities with a credit. Asset equals liabilities plus equity, and unearned revenues will be increased there, right? Okay, with a credit. Unearned revenue says that, and think about it from your company, you owe a service for me, right? You owe a service. So when you look on your books, unearned revenues, because you have a balance here, a credit balance tells me I have work to do. Now, if you do work and properly make a journal entry, then you have a debit to unearned revenues, okay? If I recognize or if I do the work, then I can earn, no, it's not unearned, I can earn revenues and I can reduce my unearned revenues. Okay? So this is the one we're focusing on. If I forget to record my unearned revenues, then what? How does this affect assets? It does not, right? It does not. Assets would have actually been affected up here because what would have happened to get unearned revenues, I have to give you cash, and this is your business, right? So you would record cash on a debit, and then you would have to record unearned revenue. So this is your business. I always think about it as being your business. To get unearned revenues, to even have that come up, is I have to pay you ahead of time, and that's what would have happened. So if someone would have asked you, well, what if you forget to record it at first? Then you would say my liabilities would be understated, and my assets would be understated if I forget to record it. Okay. When it's actually done, this has no more effect on cash that's still in the bank. This is the only account that we would have changed right there. So, it's asking about the effect on assets. It's just kind of it's kind of good to look at them a different way, because if we do it, it just kind of helps us, I think, with the other one too, because it asks for both of them, for both accounts. So that's why it has two, but it just wants to see what's a little bit different about assets right here. Okay. Does it help you out? All right. Man, we just don't have enough time. Like 20